Hey, it's Jeff Borham, owner of Team Borham at eXp Realty. And what the heck are interest rates doing? I've got a couple contrarian thoughts and some different ways of looking at things for you to digest so that you can make the best decisions whether or not you should buy or sell real estate in the current market. Let's look at the past. A year ago, people were getting really low interest rates, but guess what? They were paying top of market, they were waiving appraisals, and look, they were paying 30, 20, 50, 100,000 over ask with cash out of their pocket. So let's fast forward to today. Multiple offers are generally gone unless it's a really special property. So what does that mean to you? That means you're paying list price, you're actually able to negotiate, and you're not having to come out of pocket with, let's just call it $50,000 worth of extra cash, right? So how does that equate versus mortgage rates today? Well, with mortgage rates where they are in that 6.5% to 7.5% range, depending on your loan product and credit, you could be looking at a median price of an extra $800, $900 a month in your payment. Well, let's just do some simple math. That gives you over 4 years worth of payment coverage based off of that $50,000 you would have had to spend extra a year ago. And there are 0 people on the planet that don't think that interest rates are not going to go back down in the next couple of years where you can refi out of that payment. So in fact, buying today with rates the way that they are will likely save you money as long as those economists are right, because Fannie Mae says interest rates are going to 4.7% next year. You refi into that, and buying today would be a much better financial decision than buying a year ago. And I trust that you like to make good financial decisions for you and your family. Second, you can negotiate, and there's special loan products out there. There's 2-1 buy downs. That means you get 2 interest percentage points off of your rate for the first year and 1 off of the second year. That gives you 2 years with reduced payments, and we're able to negotiate where the seller pays for that most of the time. There's also ARM products where you're locked in for 5, 7, or 10 years with a reduced interest rate as well to offset the higher costs. So simply put, in the next 3 to 6 months until inflation and rates come down, you can negotiate a better deal on your house. There's products to keep those interest rates low, and from a historical perspective, you're financially much better off buying today than a year ago. For additional information or discussing these matters in a more in-depth manner, feel free to reach out to me, Jeff Borham. I'm happy to help.